Hello, today is the 14th of December. Welcome to today's analysis, and we'll take a look at the gold to silver ratio, gold itself, and talk about up too much, down too much, that sort of deal. But we'll start off with the 15-minute chart within the silver market, and today it really wasn't all that volatile. We had the Federal Reserve saying a bunch of stuff. I still haven't checked it yet, and I really don't think I need to. It's pretty much the same old jargon. Yeah, we're gonna keep interest rates the same, that kind of stuff as the currency keeps getting created, pretty much practically through thin air, and thus people wonder why gold is over 1400, silver is getting past 30. And to me, it just seems very obvious. But moving on to the analysis, we pretty much are in this little very, very, very tight little range between 29.5 and 29 and 2/3. It's really nothing more than less than a 1% move from top to bottom. And this Fibonacci level, it's pretty much just consolidating at that Fibonacci mark. And now it's at the point where if we do look after the fact and there's going to be moves towards the upside, say it looks something in the area of like this, then we look back, we'll say, yeah, this was a big Fibonacci level because it stopped there for a few days and then it lifted higher. Or if it goes lower, same deal. Yeah, it found resistance and then came back down to 29, which is where it will be going towards if there's any continued downside, as well as the 5 and 10-day moving average. Now moving on to the weekly chart. Sorry, I was unable to get any dates down below. Little spreadsheet error. However, as far as the charts are concerned, it's been a pretty decent run up from the levels we had from 2008, the fall or the end of the year. Silver getting close to $8 an ounce for a very short period of time, and well, since then it's up to 30. And some might say, well, you know what? It's been such a long ride that this this is up too much. We're at highs that we haven't seen in 30 years. It can't go up anymore now, can it? And some people are stating, well, when everybody that is into silver or wants to get silver, everybody knows about it. You go to your hairdresser and they're talking about silver, the taxi cabs talking about silver, and so is the shop teacher at the high school talking about silver. When that happens, then that can be the case. But right now, that is not it. Most people are still clueless towards it or really don't care too much about it. When that's the case, then it is not valid that it's too many people know about it, too many people are into it, therefore it's going to stop going higher. To me, that just doesn't make any sense whatsoever. And if you're on this move going higher, you've been long, and you're trying to figure, well, where do I put a stop loss? How do I manage my risk from here? And that managing your risk is something that one should be figuring out how to do this on their own. And first of all, how are you playing this? Are you playing this with real physical metal? And what's your strategy? Is your strategy to make this your form of money? This way, if you ever need to buy anything, whatever it is that you're looking for when you need it, you dip into your gold, you dip into your silver, and that's how you spend it. And do you have some sort of stop in place? If that's the case, find out what's best for you, because as long as these moves are going parabolic, there's nothing to state that the parabolic stages are done. And on a technical level, when a big uptrend even goes further, that's when you have the 30-40% moves in a week type of gains. Now, switching over to gold, anyone who says gold is in a bubble, they have been wrong every single time, and they will be right the last time and wrong every time before then. People thought gold was up too much here. It was not here, 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 here. It just kept going towards the upside. And if you buy because it's at, or if you sell because it's at all-time highs, then this is where you would have been selling when gold got above the 1980 highs of 800, and well now it's getting close to the 1500 mark. Now gold is going up very big, but it's not going up the same as silver. This is the gold to silver ratio, and I brought this chart up about a month ago. And the same thing has been going on. It's just wearing people down as it continues a pattern of lower highs and lower lows. If you're ever in any kind of chart like this and you're going long, this is the type of pattern that if it doesn't scare you out, it will most certainly wear you out. It has not been able to get even touch this 20-day moving average. It's barely been able to get above the 10. Right in here, it got above the 10 for a short period, and well, that was really it. And even the 5, it had a brief period above the 5 in here, brief period above the 5 here, brief period here, and a couple pierces, but for the most part, it just keeps going lower. And generally speaking, when the gold to silver ratio is lower, that's because silver's outperforming gold to the upside. Silver has 4% up days, and gold has a 1% up day. So for the most part, you want to be long on both gold and silver when this keeps declining. Now, in the long-term time frame, we're taking a look at this gold to silver ratio, and well, one might say, well, is this not down too much? At some point, it's got to bounce, doesn't it? And the answer is yes. At some point, it does have to bounce. But how do you know that some point is going to be at 47 or at 45? And maybe we do have a bounce at 45, but it's only up to 50 or 52 before it continues to head lower towards the downside. As long as the silver market continues to outperform gold, then this is going to keep going towards the downside. And I have my opinions on this, and my opinions might be as good as anyone else's, but what mine state is that the ratio has a long ways to go lower, as we are nowhere near its historic level of 16 to 1. And I believe on the very long-term time frame that silver will be worth more than gold before the end of this century. But at least for the time being, it was in this a symmetrical or type of triangle, and it obviously has broken this towards the downside. And any types of rallies or any moves that brings this higher most likely would be guilty until proven innocent, and most likely what would have to happen is an intermediate term top on the gold and silver market to bring this higher. And most likely at some point, whether it be this previous support level or whether it be this 5-year moving average or whatever, resistance point would have to be met. And earlier I was talking about this chart, how silver is becoming worth more than gold since its last two peaks. In the year 2006, gold managed to get to $730.08 an ounce, where silver it was $15.21. Well, since that period, we can see how, as the markets were going lower, the gold to silver ratio was rising. And at this point here, silver was down about 40%, where gold was, well, break even. And now today, at the close of the market, since the top in '06, silver is up 94%, and gold is only up 91%. And I say only on a very loose level. But what I'm trying to emphasize is how it's this bar or this line graph is going above the gold one. And I don't know if this says that the silver buyers are in control against gold. I'm not really going to touch that one, but the same thing is pretty much true within the 2008 highs. These are the highs when gold hit 1029, silver 2135, and when silver was down at the most up down towards here. Silver was down like 50 something percent, 56, 57, where gold was only down about 30. When gold got back to break even or back to that 1029 mark here, silver was still down about 20%. But today, silver is up more since the 2008 highs than gold is. And just like the previous chart, this white line seems to be going above the yellow line, which indicates the price or the rate of return that has came with or has been brought to us within the gold market. So thank you for watching this video and have yourself a magnificent day, everyone. Bye bye.